Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how investors are reacting as we make our way back to normal. And Phil, despite post-earnings talk of stretched valuations and lack of an actual vaccine news, the S&P 500 has performed quite well since mid-May and continuing to tick higher today.
Yeah, we saw that the market bounced pretty aggressively off its lows in March, and then it traded a little bit sideways through most of April. But if we look at the market returns since sort of the middle of May to now, it's up around about 14–15%. So, yeah, the market's really turned quite bullish and pretty consistent run of positive returns too. Obviously, not off the back of any vaccine news, because as you said, it's been a while since we've had any really strong news on vaccines after that original little spurt of some phase 1 trials being finished. So it's really being based on the fact that people are getting back to work and the fact that Europe hasn't seen a spike in cases. And so the hope is that that will happen here and we'll all be back at work, maybe wearing masks, but things will be much more like normal in a relatively short period of time. And that'll translate into earnings for companies, which translates into positive valuations.
Let's take a look at the unemployment data from Friday last week. It appears to be a big boost from what's happening in the market is because the number was not as bad as has been expected. If we look underneath the headline, what are you seeing in there?
Yeah, so you say big boost, and I guess 2.5 million is big, but in reality, it was expected to be a pretty big negative, and that's why it was such good news. But it does fit with some of the things we've been talking about the last few weeks, just looking at the fact that restaurants are starting to see a few more people come in, that stores and retail sales have been increasing, that hours worked have been slowly increasing. Even airlines have seen their bookings start to tick up. So, you know, the people that were furloughed or that were on the PPP programs are most likely starting to get asked to come back and man shops and do a little bit more hours. And that's what we're seeing in the results by the looks of it.
All right, moving along to COVID-19 data, we're starting to see that the emerging markets are really driving up global cases. We're at, what, 7 million now globally?
Yep, over 7 million cases. And you're right. I mean, we talked last week about how it's shifted from region to region to region, starting in Asia, shifting to Europe, then into North America. And now it really is South America that's leading the new case growth. So although the global case curve looks like we have a second wave happening, it's really not a second wave. It's really just as the virus evolves around the country. Some people are sort of talking about the fact that South America is obviously heading into winter, and maybe this is a reflection of what's going to happen to us when we get into winter, and maybe we'll be at risk of a second wave. But I think it's also just worth highlighting that they were late to start seeing the new cases as well. And it does seem like it travels around the world faster where there's a much bigger tourism industry. So, you know, we'll learn more as we go through, but at the moment, it just looks like Latin America is getting it a little later just because they have less people coming into their economies. When you look at Brazil, that's obviously where the new cases are starting up to expand, and some of the other Latin American countries are seeing a very similar curve, so that exponential growth curve.
All right, if we look at our last chart here, we can see how the difference in responses really does make a difference in terms of how well countries are going to react to this. I mean, Iran, their second wave is even worse than the first.
Yeah, it's. I mean, these are the two alternate scenarios in a way, isn't it? And you look at Iran, and they have tried to reopen a couple of separate times, and each time they've seen a new burst in cases. And this second wave, or arguably maybe the third wave that they've had, has now had a higher peak in new cases than their earlier wave. And so that's what we don't want to happen in Europe and the US and any country that's trying to reopen. That's kind of the worst case scenario, but this proves it can happen. The contra is what's happened in New Zealand, where they were luckily kind of geographically isolated, but also they shut down their economy really strictly. They put people in quarantine, and they've actually got over coronavirus. They've had no new cases for days, and it looks like they may have eliminated it. I don't know how they're going to open their economy back up. But right now, they're all back to work, back to school, back to normal. So that kind of speaks to the value of a really strong quarantine is you can get over the hump and get everything back to normal versus a weaker quarantine and rushing back to work. And so that's the sort of fine line that we're walking in the US right now, because we had a US chart in that last slide. It just looks at the growth rate of the US, it hasn't been improving anywhere near as quickly as a lot of the European countries. And now that we're getting back to work, it looks like it's sort of flattened out at 20, 25,000 cases a day. So the US is kind of treading a fine line between getting back to work too quickly and getting this so under control that the risks of contracting it have gone down to much closer to zero.
Yeah, well, let's hope so, because I find it really hard to believe that should we get an aggressive second wave, that they're going to shut down the economy 100% like we saw with our first wave.
Yeah, but the data we saw out of Sweden shows that if we get a second wave, people's habits will change anyway, and so it will still impact the economy. Yeah.
All right, we shall see. Phil, thank you so much as always for joining.
You're welcome, Jill.
All right, thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.